Good afternoon, everybody. Good afternoon. Good afternoon, everybody. Hope you're doing well. Thanks for joining in today for the session. It is the 8th of August. Today, after a relatively slow couple of days in the markets, yesterday was abysmal. We'll talk about that in a moment. It was, not very good for us yesterday. I don't think it was very good for a lot of people actually out there. We have just had the initial jobless claims data released. As we can see, we did actually get a bit of a volatility strike that was worth mentioning in this Dow Jones here. Same as the NAS 100 as well. We did actually see a rise of 0.62% up in the Dow. So a fair few points, 38.73.80 to 38.977.76. So yeah, a bit of a jump there. NAS 100 as well. We can see here. Quite a decent pop up there as well. Lots of structural points broken along the way. Just waiting for a retest to come back down now so that we can, I guess, consider buying in. We are in a high risk area at the moment. Obviously, the markets as well will be incredibly temperamental just because of where everyone is or where everyone's thoughts are positioned. RE recession in the United States. So obviously, if we see the jobs data via the initial jobless claims coming down, it would lend itself to that end, to that fact. And so therefore the stock markets that will do sort of a lot more, I guess, in low interest rate environments, more risky area to store your money than a savings account. And when interest rates are down, savings accounts are kind of meaningless, aren't they? So stock markets will rise as a result. And so here we are. We've seen this big jump up. So we've had a retest of liquidity actually in this NAS 100. This point here, it's quite nice. We have been building up for a breakout for the majority of the day. We've got the ascending level rising up through the bottom of the market here, and we've got the ceiling of the market in there. So we have got a rising wedge pattern here. We have broken free of this one quite nicely. We've smashed through the liquidity here. We've come back down for that retest, and now it's kind of just sitting on top of it. Hey, good afternoon, guys. Hey, Braden. Good evening, Matthew. And good afternoon, Nadia. Good afternoon, Paul. Good to see you guys. Yeah, so that's where we are at the moment. That's where we are at the moment with the stocks. So I think, we've kind of, obviously we didn't get in on the initial news release. And so therefore I think it's kind of worth waiting now and biding our time until the US Open. I don't really want to be trading this now because we've missed the initial move. So now it's about just simply waiting for the necessary setups to come on side for this afternoon in the US Open, and then to go from there. So that's the plan of attack. So I'm not really too worried about what the stocks do. I don't want any pressure on us to be rushing around and searching for these trading opportunities at this time. There's no reason to. But let's move on to a review of yesterday. Yesterday, as I said at the beginning of the session here, it was abysmal. I actually ended up the day in the fund minus 0.5%, so I did 0.5% down. I took one position in the US Open yesterday, which was a US 30 Dow Jones trade. It was a loss. And I took another trade, short, as per the signals, USD CAD. That was a loss. And then late last night, I popped on and I noticed that James was having a bit of a rough day as well and was struggling a bit. So I posted out a couple of trades in the trading room, and I ended up actually setting a pending order on one myself for the Euro Oz, which was a winner as it happens. Unfortunate thing is, it was a 0.25% risk on the losers from yesterday, and the Euro Oz I only risked 0.2 because of the time of day it was. So, yeah, ended up and ended up getting a decent win, but it didn't override the losses by any stretch. So it was a drawdown day yesterday. Obviously not by a great deal, 0.5%, as I said, but it was still awful. Nothing was really happening. The markets were in a very, very significant sort of static state. Now, if we go through, we don't have anything in the markets now. So, as far as I remember, we are completely flat, which means that we do have room for some fresh trade ideas. So, in terms of what's looking fresh, we can go through, have a nose. I think this UK Brent chart is not looking too bad at the moment. We've got a bit of mess going on here, but looking at sort of that there is the ceiling, the area that you want to see the structural breakout from. You've probably got a pretty decent margin back up to, let's say, this area for a very short term intraday trade. So something like that is the TP. And then we don't need that so wide, so that's going to be the entry. And this is going to be the trade idea between these two areas in here. So that's looking like a 1 to 2. Simple breaker structure, no BCR requirement of this point. If we want to take a long above this, this will be a BCR. If we want to take a short from here, it will be a breaker structure. But this one here is just a simple breaker structure trade. 1 to 2 risk reward ratio, looking for a lot up to 80-42. Yeah, so that's that. Now we do have the option of trading between these 2 points as well, but honestly, judging from the price action that we have seen over the last day or so, I won't be happy doing that. I do want to see evidence of the market breaking free of this area and then to see that push up to 80-42. I think if we can break free of this, it will probably add some fuel to the momentum here. So looking at gold then, this is one of Matthew's call outs today, and I really like this one. Out of everything that we have been looking at, out of everything that's going on right now, this does actually look like it's potentially going to yield us some pretty decent results on either side of the market. So first of all, entry for the short. Now, this is a chart that has 2 trades, right? We've got the trade on the top side, definitely. We've got a trade on the bottom side as well. So we've got a TP in here, which is essentially the floor of the market at the moment in gold. We have a long TP, which is probably, I mean, we've got technical risk factors, right? We've got technical risk factor in here, but the long TP for gold is probably going to be like there, for example. We definitely, there is the level of liquidity without a shadow of a doubt. But I don't want to go right up to there because I think it's a bit too optimistic. So I'd rather go down to this area here, which almost is the median between that previously used bit of range before we broke free of it. So we've got a lot of price action going on in here at the moment. We've got lots of retests and rejection areas, especially in recent history. So I think that makes for a good long TP. So now what we've got is a situation where we have the same trade to the upside as we do the downside. Very, very equal margins. And I really like those trading parameters. Makes me feel relatively safe, I suppose you could say. So, looking at this chart, having a good gathers, where do you all think the entry would be for the short, and what also would the entry barriers be to either side? So, if we're going to be buying the long or selling the short, what does it look like in terms of the entry criteria that we would be using for both of those ideas? Please post your answers. Okay, Braden, you say the BOS for the short and a BCR long for you. A BCR long and a BOS short for Matthew. A BOS short for Paul and a BCR long. A BOS short and a BCR long. All right. Good afternoon, TJ, as well. I've seen you come in, mate. Okay. So, you're absolutely right. Every single one of you. There are no outliers. You are absolutely right. The necessary respect obviously needs to be paid on this area, doesn't it? Because of how many times the market's had a major area of imbalance. Every time we've come here, we've been traveling in one direction, and when we hit this area, we travel in the opposite direction, and vice versa, and it happens over and over and over again. So we all can see that. We can clearly articulate this from the visual piece of information that we've got in front of us, which is great. It's really, really good. And of course, and then to take a trade short, looking again at maybe this area, just so it's a little bit more clear for you. Where do you think the structural point for the short would be? So give me a number, I suppose. If you can see the numbers on my charts, if you want to use your own charts, that's fine, of course. Where do you guys think a decent level to short from would be? Okay, got two 24.05s out of the box straight away. That was in very, very quick succession. And we got Matthew saying 24.05 as well. ChatGPT is not on the 24.05. It's not his type. And Paul, are you agreeing with ChatGPT or are you agreeing with your fellow peers, mate? Okay. Well, let me tell you, right? I am on the side of ChatGPT, and I do not jest. ChatGPT's nailed it. Okay, and I'll tell you why. I'll show you why. Let's say, for example, 24.05 is our entry, right? So 24.05 is going to enter us into the market right here. Okay, 24.05. That's the breaker structure point. Now I know why that's an entry, why it looks like it would be an entry, but I've given you all the pieces to this puzzle. Now, let's think about the price action that took place in here, right? This element. If we look at the floor that was formed in here for a while, as price action was kind of ranging, it was stuck between these two margins apart from this single outlier that was a fake out. If I drag that zone across to the right here, what do we have there? We have a break close and a retest, right? Before we come down here. If I drag this along to the right even more, I now have a midpoint of a W reversal, which is a big area for inflection. It's an inflection point in price. We've rallied, straight up to this area, and we've rejected it and gone right back down to the lows again. Now, if I take that and I drag it across right, and I'm executing a trade at 24.05, I'm executing my trade directly into liquidity in that gold chart. Directly into it. So, based on this information, if you're trying to work out, you guys are trying to work out the highest likelihood of that position working out, and we're trying to clear out any dead orders, because there'll be orders left in the market that will be forgotten about to a certain extent. And we want to make sure that we're in a space that everybody is going to be driving the price action down, and not just 50% of the liquidity. Where now do you believe that we should be going short? Yeah, 23.98 below the S&D zone, whatever you want to use. Yeah, 23.90. Yeah, low, like very very high 23.90s. Even 24. To be honest, I mean 2024 itself, 24 flat is not a bad shout. Look at where 24 is. All right, target profit's going to be on the roof there. Your stop loss is going to be a margin above that zone there. Probably looking at a 1 to 1.9. I'd say that's probably the trade idea there for gold. 24, frankly, looks a bit low. Actually, I would actually say even maybe like 24.01. Actually, would be the probable area for an entry in this market. So does everybody get that then? Everybody see that, right? And everybody also agree that even though we're only talking about very, very small margins here, very small margin of difference, it really can make all the difference when it comes to looking for those clean entries in that path of least resistance that we've been striving for throughout our entire careers, throughout that I continuously work towards, for the last bloody 10 years. Yeah, cool. All right. Well, let's all get it in our charts then. That's a trade idea. I like it. So let's map it out. Pending order. No manual execution is necessary. You want to go for a fixed 1 to 2 risk reward ratio, okay? Or a 1 to 2.1. 1 to 2.1. You want to be looking at the 50% point between this zone and this zone. So wherever that is. For me, that gives me about a 1 to 2.16. Just an average. And that's our trade idea. Now for the long, it's a breakout and a retest. So remember, pending order for the short is fine. Breaker structures are pending orders most of the time. Whereas a BCR does require a little bit more manual finesse. So if we have the break close and the retest taking place, if we get the breakout, then we can put an alarm in to trigger when the market comes back down. When that alarm triggers, we can then put an alarm in on top and the pending order begins. Because when the market comes back down to retest an area, you can put the pending order at a place where it's going to break the structure, where you can guarantee the structure is going to be broken, and then you can continue that pending order process. But until that takes place, we're going to be stuck using manual. So yeah, top side is certainly available, certainly looks good, but it's going to require, like I say, a little bit more from us. And that is also yielding a 1 to 2.16, which is ridiculous. That is completely unintentional. So you've got the exact same trade idea on the top and the bottom there. All right, let's move on. So Aussie CAD. Yeah, I mean, this is definitely not terrible at the moment. We've got a descending level, which I think is probably worth having in the chart. I mean, that's really nice. Really, really nice. Super, super clean. Lots of respect. Well established. We like well established levels. Okay, now across the floor, we have a little W reversal, 15-minute time frame one. We've got the floor, which starts off from this area in here. So we can drag that floor across. And that's our liquidity point. So now we have this really nice sort of trading margin that we've been, working with here between the descending level and the level of liquidity down below. The next point up is this one here, right, where the price line is trading at currently. And that's the next point up. So as we drag that along, that's going to get closer and closer to the white line. But frankly, we're going to be able to take the trades inside these margins for a long time yet, on the proviso that the price action genuinely does want to stay in it. I mean, if we get a breakout, we get a breakout. We got to adapt. We got to change. But at this stage, this Aussie CAD is actually looking really nice, and I love what I've been looking at in here, because this is just easy money. Easy money. So supply and demand. Area in here, bit of a, not necessarily too much of a nice breaker structure point to use, frankly, but one that we are going to use nevertheless. And then we're looking at the margin of the trade being between this area here and this area down here. So again, this is pending order work now. Okay, we don't need to think about anything else. Get it in the market, pending order. Stop loss 50% point between the two zones. Entry down below here. We've flushed out the rest of the orders in here. We go down. It could be a fake out. It could be a loss. It happens. As it happens, it's actually happened a lot this week. But that's just what it is. So another nice pending order. For the time being, I'm not actually interested in any Aussie CAD longs. So as far as the longs are concerned, I'm out. Once we get up above this area here, we do have the opportunity to take the trade up to around 90.80. But that's not going to happen today, so there's no point putting an order in the market for it. And plus, I would probably be looking at a breakout retest of this area anyway. And I don't want to be farting around it maybe 4 or 5 o'clock in the afternoon waiting for that to take place either. As I'm sure you guys don't. So, pending order, we can leave that in the market. Little exposure. And yeah, we'll be fine. Aussie yen. Bit of a mixed bag obviously this week. Nothing to be said about it right now. So we can move swiftly on from that one. Aussie NZD. Again, yeah, I'm not too fast to be honest. Yeah, not too fast. Coming into an area of liquidity right now. We've just come from one. Very tight trading margins between the two. It could be a okay short below here. Break a structure trade down to the previous lows. Certainly doable. That's a nice position in there. Is it going to work out that way? I am not entirely sure. I mean, we formed a higher low. So it looks like we could be at the beginning signs of a turning point in the market. Obviously, we don't know this, just purely speculation, but we could certainly be. Now, if we look at the the daily time frame, sorry, in the Aussie NZD, we have been traveling sideways in this range for years. It's never been able to break free of it really. Right at this moment in time, we are more on the upper side of it than we are the lower side, but we're nowhere near the actual top. The top of the range is about there, around 112.80, maybe 113. So it's really at a bit of a precarious position at the moment, this one. Now we have had this area here where we've got this sort of dip down, and then we've got the bar today, which has just come straight the way back up again. What's that telling us? Who's in here? So there's definitely people in there, isn't there? Exactly, the buyers, the big guys. Central bank manipulation, whatever you want to call it. There's going to be stuff going on in there. We've had one dip down, and we actually closed off the day at a hammer candle. And then we had this area in here. We've come back down again, instantly come back up. I mean, it's head games, isn't it? You know, psychological warfare going on in there at the moment. But looking at this and this rally up, we had this rebound here. We've now come back down. Very, very nice retest liquidity, and this is a good level. Very, very nice level of liquidity, this one. If we drag that one right the way back, this has definitely been used. Definitely. Look at this. How many highs going on in there over the years? I mean, we are going right the way back now, guys. You know, right the way back. 2022. I mean, we could keep going back, to be honest with you. But if you look at this level of liquidity, it's a beast. It's not the one that we see the major inflection points most of the time. But yes, it does cause a lot of volatility when the market gets there. Volatility being major turning points in the market. So I think it's safe to say that we'll probably break out of this area. That's what I would think we're going to do. I think we're probably going to break free of this area in here. And then we would likely be looking at taking this back up to the highs. Our highs representative there. So then if we go back down to our 50-minute time frame, our trading margin has now got a fair bit larger. Now the breaker structure point for a long in the Aussie NZD, and this is going to be a trade that's open probably for a good couple of days or a good few days. So that's the breaker structure point. What this also provides is an intraday opportunity before we even get stuck into the long-term one. So let's go in here, for example, we have these areas, don't we? These sort of little itsy-bitsy areas. So if I draw a zone across that sort of encompasses these areas, this rebound, this price action pullback, this retest before the big tank off the edge of the cliff, well, that's now a really nice entry for a position. So if we then long from there, target profit up at the high, stop loss is going to be down there at the top of this zone. Well, we've now got a 1 to 2.06 risk trade. So I'm going to leave that in the market as well, because I think that's quite nice. I like that one. And then once that one's done, we can then look at the real big one from around 110.20 up to 111.20 for 100 pips. So we'll wait to see that one come on side, but we'll get this little one done first. Right, what time is it? 2 o'clock. Kind of need to start hurrying up a little bit more. Aussie dollar still done nothing. Now I can't remember if I said this yesterday, but I've removed this from the book. Okay, so this was a pending order for a long time, but it's gone now. I've removed it. In terms of fresh trading opportunities, I mean, this Aussie dollar looks good, right? You know, I'm not going to sit here and say, oh yeah, no, there's nothing here. There is definitely opportunity in here, but we are now talking about the fourth Australian dollar pair that looks interest. So we do want to start thinking about this in terms of risk management rather than trading opportunity. So break a structure below this area. You have one technical risk factor at around 65.10, and apart from that, nothing else. So this is very, very solid market. One technical risk factor, which is at this area in here, and apart from that, you're a clean shot. So the short triggered around here, stop loss is going to be at about there, target profit is going to be about here, and that's yielding a 1 to 2 risk reward ratio. Right, so not too bad, but we are looking at Aussie NZD, Aussie dollar. We didn't do the Aussie yen, and we're looking at the Aussie CAD as well. So that's 3 Australian dollar pairs. So if you're looking at taking all three, it's 0.2 per trade. If you're looking at taking two, it's 0.25. You can work out what you want to do. Better diversification, or not so much diversification. Load up the risk on the two that you are taking. Alrighty. Nothing in the euro yen. Not a fan. Euro NZD. Yeah, not at this time. No. No, not at this time. Euro Oz. Unfortunately, no. Again. Yeah, unfortunately not at this time in the Euro Oz, to be honest. It could be. In fact, I tell you what, oh, no, actually, because we've got that ceiling there, don't we? Yeah. Nope. I'm going to be a sitting duck at the Euro Oz. Hey, no worries, Paul. Yeah, that's okay, mate. No worries. Enjoy your day at work, buddy. Hope it all goes well. So, yeah. No, not in the pound yen yet either. That's just gone, isn't it? I can't imagine the market's going to come back there anytime soon. I don't... What do I do? Do I leave it? No, I'm not going to leave that one either. So count that one out officially as well, guys. Cable's being removed from the pending slot. No more book. NZD JPY. That's not too bad. What we got here? I don't like that though, because that's the low here, but the highs are breaking above and they don't really end up anywhere, so. And then the margin turns into be a bit crap as well, doesn't it? No. Hey, who cares? I'm not going to go for it. That's fine. We've got 3 trade ideas in the Australian dollar pairs. I wanted to spread the risk out a little bit, but to be honest, if that's the way it's going to go, then that's just simply what it is. This NZD USD though, this is looking very good. Yeah, we are definitely going to be adding this to the order book, that's for sure. So that's your true level of liquidity in there. I'm leaving the wide one though. Gets rid of the margin for error. We've got the lower. Well, that's a perfect descending level. But I'm not really interested in that right now. I think that there would make a relatively decent area. Come on, there we go. Thank you. So, what do you guys think of the entry barrier to this one? Just out of curiosity. How would you go about getting into it? Get a close below that zone. BCR below the zone to go short. Okay. Yeah, okay. So, I would be on the side of Nadia for this one. Thinking back to where we were with gold, about the necessary respect in the market because of how many times that zone had been hit. Well, this is no different. And if I inverted the chart, let's invert it, see if it's psychological. Alright, so that's where we are at the moment. Now, ask yourself again, what would you do? Would it be a breaker structure or would it be a BCR? Honestly, doing something as simple as that often does give you it gives you a bit of a nudge in the brain. Because maybe, you know, sometimes you get used to breaks of structure just because it's short. Just because it psychologically you're thinking of something, a physical material item falling. Now, if you were throwing something up in the sky like this, it would have to come back down because of gravity. So you would psychologically feel that it would need to come back down and land on here for a bit before you could get up there and then throw it even higher. But if something's dropping, in a sense, it should just drop. It should be easier. It's easier for the price action to drop than it is to rise because of gravity. Right? It sounds insane, but it's not. That's the way we're hardwired. So I urge you, every now and again, if you're thinking about something, you're thinking about a BCR or a breaker structure or something, just, Alt-I. Have a look at the inverted charts. Have a look at it upside down. See if you think the same thing. If you don't, then you know where your issue is. It could well be, mate. It could well be. I'm not going to say that it definitely is, but I do know it makes a difference. So a little bit of an insider tip there for you. But no, Nadia is absolutely right on this one. It's BCR. So we've got a previously used level of price equilibrium. Lots and lots of respect on the top. Lots and lots of respect on the bottom. So the plan of attack here would be to wait for the BCR back inside to confirm that it's now using this area again. And then we go from there. So where's my path? So down, retest, drop. And so then we do not put the pending order in the market just yet. We have to wait. So use alarms to utilize this area instead. And then you'll be looking at a 1 to 2.27 on that one. But that's it. That's a fun trade idea, okay? I really like that. I think it's solid. So we'll go with that one. And for the long, I'm going to leave it out for the time being. USD CAD I only just took a hit on, so I don't really want to get too invested with this one again. The long here does seem viable, and that's going to be this area in here. So when it comes to this area in there, you do have the capacity to trade long from there to there. I will certainly post that one out if that's the case, though. I cannot make my mind up yet whether I want to get back involved so soon. I'll put an alarm on it, and then we can revisit it as and when's necessary. Right, and that's the USD yen, which I'm not touching today. So, a little bit of a review. Some relatively solid opportunities being added. UK Brent, gold, Aussie CAD, Aussie NZD, Aussie dollar, and all the way down to the NZD USD, potential in the USD CAD, potential. And now for our US stocks. So, US stocks is a direct result of the initial jobless claims are now rallied, and they've now remained relatively stable. You got a 1.8% gain today so far on the NAS 100, and that's possibly a bit of an issue. Not entirely sure. The US 30 Dow Jones is currently sitting at around 0.74%, so it's got a lot more room to move. Now, because of where we are, and we are on top of liquidity here, we're not up against it, we're actually resting on top of it. If we get a break of structure below the floor in the next 20 minutes, then what we're going to do is just remove that, and we're going to trade short the NAS 100 between there and there. And you guys will literally see the exact trade idea that you could have got on the initial jobless claims, but just traded lower. So that's what we'll do. Now, the entry for this one is not actually here, it's in here. That's the breaker structure that you're looking for. So then your trading margin is going to be really bloody good on this one. Or not the margin, more so than the risk-reward ratio. Because your risk-reward is going to be very healthy. Aggressive entry, that's going to be about there. Stop loss is going to be about here. So that's, like I said, 1 to 3 risk-reward ratio. Really, really solid. And you should hopefully be done and dusted with that one in no time at all. Now for the long, you've got the 1, 2, 3. So it's going to be a breaker structure for the high as well. The long, oh, yeah, that's not nice actually. So I think what I would do is leave that in there, but, and it's a big but. The big but is this. Don't worry about the dog. She's going mental because the bloody Amazon guys come around. Hang on. So this area in here is a problematic one. So we need to see the breakout officially of this area to then see the rally to the top. But by the time the NAS 100 gets up to this area, we are going to be talking about a 3% day, which is significant given the fact that we do not have any major catalyst to drive that price. The risk-reward ratio on this one is going to be really nice as well, looking at a 1 to 2.8 on average there, maybe a 1 to 2.4, it depends where you get in exactly, but that's a solid trade idea. What we've got in between, let me just mark this out properly, so between this area here and this area here, this is your no man's land, all of it. Okay, so we're only looking at longs above here and shorts, really, to be honest with you, below there. So let's just remove that and bring my amazing letters down to kind of more accurately fill up that space. So yeah, that's the NML in between this whole area in here. Okay, and so let's have a look at the Dow Jones then. So the Dow Jones at the moment is kind of sitting inside liquidity. We haven't had any proper nice breakouts. We've had a couple that have been very, very short-lived. But in order to get going on this one, we do need to really see that, you know, nice consistent breakout. Next level of liquidity up is this one in here, and that makes your trading margin for the day. Now, exactly the same as the NAS 100. The breaker structure level for the short is going to be in there. However, the US 30 Dow Jones has a much larger technical risk factor, and that sits in the market about this area in here. So we've got this area, we've got these areas, we've got this one, and we've got this one. Now, if you refer back to the NAS 100, we have that, and then we have like this. So there's a big margin of around what 1799 down to 1794.70 of just space that I think will be easily taken care of with the breakout volume. With the US 30 Dow Jones in here, this area is much more significant. We have much more going on, many more inflection points and stuff going on throughout the course of action, throughout the course of the life cycle of the price action down at around this area. And so you do want to be aware of this one. It's not as cleanly set up as the NAS 100s. However, it doesn't mean it can't be done. So this area in here is your trading margin, similar to the NAS. Stop loss at the bottom of that zone at 38,902. Target profit down at 38.76. And this makes for a pretty decent trade as well. But you do want to remember about those risk profile factors that we've just been through. Okay. So again, these are all fund ideas. Okay, these are all going straight into the order book. So this one in here, break a structure long. Again, no BCR requirement of this one. We're going to trade between the margins here. High target profit 39.093. Entry at approximately 38.978. And the stop loss for this one, difficult place really, but right in the middle of the 15-minute area liquidity for a 1-to-2 risk reward ratio. Now this zone here, if I put the outline of it, it might assist a bit better. So let's make that yellow, for example. So that's the margin underneath that we want. That's what we're going for there. Okay, and that's it, guys. That's what I think our plan should be for the day. So, is everybody crystal clear? Yeah, good man, good man. Everyone else? Okay. All right, good stuff. Well, so long as everyone's absolutely clear then. We got the pendings in the markets. We got the manual execution stuff up on screen so that we can be present and aware. Let's go kill it. That's all I've got to say. So guys, listen, I'm going to wrap things up there. I want you to take care of yourselves. Trade safe this afternoon. Hopefully, fingers crossed, we have passed the point of the midweek slowdown, and we're going to see some decent price action triggering trades this afternoon. We can but hope, eh? We can but hope. So let's all take care of yourselves. Have a great afternoon. Let me know how it goes, and I will catch up with you guys soon enough. So take care, team, and I'll see you then. Thanks a lot. Bye-bye.